to another edition of Making Money with Marty Moose. I'm Marty Moose. Today we're going to talk about what I'm going to refer to as kind of like level 3 investments. These are a little bit more speculative, a lot more volatility, potential to make good returns, but also a lot more riskier. You know, we set up our base layer here with ticker symbol MO, ABBV, and SPHD. And so we got that kind of solid base. But now I want to just talk about two stocks, CTRM and a call option for SNDL. Again, a little bit more speculative, a lot more volatility, but we have the ability to get a good return on this. And I wanted to talk to them while they were still, particularly this one, while it was still kind of low. And again, out of our total portfolio amount, which in this case on the Robinhood is going to be $5,000, we're going to invest about 30% into these what I call level 3. So it's going to be about $1,500 with a base amount of $5,000. And you know, over time, I'm going to obviously invest more and buy more shares or different shares and keep kind of doing this, some in the nice solid base amount, some in level 2 and level 3. So let's go to WeBull. Again, brokerage firms, brokerage accounts, WeBull, Robinhood, and Charles Schwab, you know, all are different. All can buy and sell stocks. Schwab has a little bit of advantage if some stocks are on the over the counter. You can buy them on Schwab, whereas WeBull and Robinhood you cannot. So that's the one advantage of that. All right, we're going to talk about this one, CTRM, Castor Maritime Incorporated. You know, the thing that draws me to this one is they've positioned themselves well during the pandemic. They acquired a new vessel, a new ship, and so a lot of times companies during the pandemic have kind of tried to shrink to profitability, and so when the recovery comes, which it will, they're not going to be well positioned to take advantage. So I've heard this company described as, you know, like Uber for dry goods. You know, they have vessels and they, you know, will then move people's dry goods, bulk dry goods, you know, around the world, you know, via ships, hence maritime. Again, so they've acquired one. They have the ability to do that. They're positioned so when things start to rebound, they'll take advantage of it. And I believe other companies will be trying to play catch up because they kind of, during the pandemic, kind of shrunk to remain profitable, and this company has actually invested. So if we look at what they're trading at today, you know, a good entry point, I think, is either going to be at 95 cents or 94 cents. And so we see there's this nice big buy wall right here at 94. And incidentally, on a stock like this, you can buy it at, you know, at a fraction of a cent, like 94 cents and 0.9, if you will. And the way you do that is you have to buy in quantities of 100, because then that becomes, for example, 94.9 would become $94.90. So as long as you kind of buy in quantities of 100, you can do that. So this is what you know, the one that stock that, you know, I'm attracted to, and it's still at a very low price. I do have to say, you know, everything presented here is for informational purposes only. It does not constitute financial investment or other advice. All right, so back to the to this. So I'm going to go 0.945, and I'm going to ask for 300 shares, and I'm going to say good till cancel. Allow this order to execute during extended hours. I'm going to go ahead and also click that too, in case it doesn't execute during normal trading hours, which are Eastern time, based upon Eastern time, and then the aftermarket will start after that. So review the order, and then So it's there and it's just waiting to execute as far as that. And hopefully I'm going to catch it through during the day. The other one I wanted to talk about was SNDL. And what we're going to do here is we're going to trade options. We're going to do a call option. So you click there. So I'm going to buy a call option, and a call option is the right to buy the stock at a certain strike price. So right now it's trading at $1.32. I'm going to change the expiration date till January 21 of next year. Okay. And what I want to do is buy it at a strike price of $1. So this company deals with marijuana. We know the country, at least in the United States, is kind of going towards legalization towards that. So right now it's trading what they will call in the money. So, but I have to pay a premium of 83 cents per 100 shares to do this. So this is a very speculative, and it's a risk. So if I buy one call option, it's going to cost me $83. And what I'm looking for this stock to do is to go up in price, and I have until January 21st of next year for it to go up in price. And as it goes up in price, this call option will increase in value. So I'm never really going to own the stock. I'm going to own the right to buy the stock at a price of $1. And the hope is, as the stock increases in value, this call option will also increase in value. So therefore, I will be able to sell it in the future at a profit. And if it does not increase in value, the most I'm going to be out is $83 for the call option. So this is why it's kind of very risky, in that I have a huge upside, meaning I can make a lot of money. If this stock goes up to $5, this call option will increase in value. If it does not, the most I'm going to lose is $83 per call options. So I'm just going to click on the call option of 83 cents, and I'm going to buy two, and I'm just going to put a limit price of 83. I think it's going to tell me it's got to be a whole, like 0.80 or 85. It won't let me do a fraction when call options are like under $3. Let's see. Okay, I'm not sure why. I only have buying power of 1. So let's buy one call option. Yeah. Reorder. Okay, and it says right there, you're paying $83 for right to buy 100 shares of SNDL at $1 per price by January 21 of next year. The option will expire worthless. That's why it's kind of a gamble. So let's go ahead and submit that. Okay, and that's kind of the position I wanted to kind of the trade I wanted to share you. So if we look at again what we're doing, it's kind of level 3, and we've taken some of our money and buying some stock here and some call options. In the hope that those will go up over time. It's interesting about some of the brokerage accounts, particularly Robinhood in cash. Sometimes I have money coming into it, but I don't have the buying power yet. So a lot of times if I were to deposit $4,000 into this account, they'll give me access to a little bit before the cash settles. A lot of times, we're dealing with the terms settled cash and unsettled cash. So in this case, Robinhood will allow me to use a partial amount of the investment or the cash coming in to invest. Brokerage firms like Charles Schwab, a lot of times, you can buy something, and then if you've got enough securities to kind of guarantee that the price will be there, you can settle up typically within 2 days. And that's usually the typical settle time is 2 days. If I buy a stock, they want the cash there within 2 days. Robinhood just cannot do it that fast, nor can WeBull. Schwab usually can if you've linked your bank account to it. When you sell a stock, even if you sold it for $5,000 a stock, a lot of times some accounts will not let you get access to that. They'll refer to it as unsettled cash, because usually from the day that you sell the investment, it's usually 2 days later that the investment settles up. So therefore, at that point, the cash would go from unsettled cash to settled cash. So again, hopefully this information is helping you out, is doing good. Again, you can subscribe. I'm going to keep kind of building this portfolio. Subscribe, like it, comment, and thank you for watching. Hopefully these videos will get better with time as I get better at practicing this and talking. All right, thank you. Subscribe.